If you have served or are currently serving in the military, the National Guard, or the Reserves, and you're exploring home loan benefits, explore VA. And you might hear like, should I also be considering another home loan program? Today we're going to compare VA home loans with conventional conforming loans and give you the scoop so you know exactly which direction might be best for you. One of the primary differences between a VA home loan and a conventional conforming home loan is going to be down payment and mortgage insurance. VA does offer a no down payment loan that does not have monthly mortgage insurance, which when we compare that to a conventional conforming loan, conventional conforming loans have a minimum down payment of 3%. And with 3% down, you would be paying mortgage insurance on a conventional home loan. And in fact, on conventional home loans, you're going to pay mortgage insurance until you put down 20%. So that's one of the big differences we see between the two. Now, on the other side of the equation, VA home loans may require a funding fee. And that's essentially a fee that the VA will charge unless you have a service-connected disability. There are a few things that will drive the cost of the VA funding fee if you in fact have one. And that's going to be whether you've ever used your VA home loan benefit before, or if you have, if you're putting any money down on the subsequent use. So that's what's going to drive the cost. And then lastly, if you have in fact used your VA home loan benefit in the past, maybe you had a short sale or a foreclosure, it does not preclude you from using your VA home loan benefit again. It just means that you will have to put down a down payment. So just some nuances between how the actual architecture of these programs work. The other big thing is when it comes to interest rate and costs. So for the most part, VA home loans will be priced from an interest rate and cost standpoint more aggressively. And the reason why is that VA does not have what is called a loan level pricing adjustment, whereas conventional home loans, meaning Fannie Mae and Freddie Mac, they have a surcharge built into interest rates that is going to essentially drive that rate higher or the cost higher based on credit score and based on down payment. So when, again, we look at the comparison between the two, let's say you have a 640 credit score and you want to put the minimum down payment. In the VA scenario, that could be a no down payment at a 640 credit score. But when we compare that to conventional, that would be a 3% down payment. And that 640 credit score is going to impact the terms, i.e. the interest rate and or cost associated. So when we compare those side by side, many times will be a better option simply just because of that. Also keep in mind that that credit score is going to drive the cost of mortgage insurance in the conventional scenario. And let's just dive into credit score. VA does not have a minimum credit score. What? A home loan that doesn't have a minimum credit score? Yeah, the actual VA guidelines does not have a minimum credit score. However, don't get too excited because VA does have lending guidelines and it's going to be up to the lender to determine whether they want to set a minimum credit score, and most lenders do have a minimum credit score set. But also realize that most lenders across the country are using automated underwriting systems. And in that case, that credit score could impact the ability of that loan to get approved. For those that are not using the automated underwriting systems with VA home loans, many lenders will do the old-fashioned what's called a manual underwrite. And VA is one of those loans that allows for a manual underwrite. So if there's something going on credit, maybe you've had a great credit profile, maybe there's just some weird thing that was identity theft or something like that that's messing up the score, or it wasn't yours or things like that. If you're using VA home loan benefits, it does give the lender much more latitude to kind of underwrite that loan in a traditional manual fashion. Whereas when we flip over to the conventional conforming side, that's not the case. Very few, very, very few, in fact, I don't even know who does it, will underwrite a conventional conforming loan manually, meaning that they would not be using the automated underwriting system. Most loans in our country that are using a conventional conforming loan are being sent through the automated underwriting engines, which are going to evaluate the risks and also give insurance on some level to that lender that's originating that loan if it meets the criteria and it is approved through that automated underwriting systems. That's why lenders like to use it. All right, if we continue forward with this whole credit score thing though, Fannie Mae and Freddie Mac have a minimum credit score of a 620. So if you have a 600 credit score and you have VA home loan benefits and you're comparing between VA and conventional financing, VA is probably going to be the option simply because of that credit score, assuming you meet all other VA lending guidelines. So credit score is a big deal. And again, remember, it's not just about the credit score. It's going to be on the conventional side. The lower the credit score, the higher the interest rate and or cost of mortgage insurance and or terms are going to be. All right. And lastly, one of the big differences between conventional conforming loans and VA home loans is conventional loans will allow for different types of scenarios on occupancy, meaning you can purchase the home as a primary residence. Maybe you're purchasing a second home or a vacation home. Then you can do that with a conventional conforming loan. And lastly, let's say you just want to acquire some properties and build wealth through real estate and you want to take out an investment property loan. That is all allowed for on a conventional conforming scenario or home loan program. However, VA is only for primary residences. So you wouldn't use a VA home loan for an investment property or a second home. And that is one of the real big differences. We have so many people that come to us that want to purchase maybe their second, third, or fourth property, and they're looking to develop a portfolio of properties. Conventional financing is really going to be the option that you have versus VA home lending. Unless, in fact, you're going to rent out your current house and then go buy a new house to live in that's going to be your primary residence. If you do have VA home loan benefits, it definitely should be something for you to consider. Oh, there's one more. I know I said lastly, but that was not the case. There is one more thing that you really have to know when you think about conventional loans versus VA home loans, and that's going to be the loan limit. Now, the conventional conforming loans, and that's why I keep saying the word conforming after conventional. You might be wondering why Kelly just keeps saying this thing. Well, this is why. Because FHFA will set every year a loan limit based on the county. And so currently that loan limit is $766,550, which means that is the maximum based on that particular national loan limit, unless you're in certain what they call high cost counties. And in those scenarios, you could exceed that loan limit. But for the most part, most areas across the country are going to be capped at whatever that loan limit is for that year. Now on VA does not have loan limits. I know, right? It's crazy, but they don't. Which means that if you are looking, let's say, to purchase a $1 million property and you're not in a high loan limit area, and you are considering a VA home loan versus a conventional home loan, you really want to dive deep into the comparison. Because on VA, if you have full eligibility, you might be able to purchase that home with no money down and no mortgage insurance, and maybe not even a funding fee if you have a service-connected disability. Whereas back in the conventional scenario, you're very likely, one, putting money down, and two, you're going to have a maximum loan limit to meet a conventional conforming guideline. Now, outside of that, once you exceed that conventional conforming loan limit, now you get into jumbo conventional financing, which essentially usually requires more money down, more number of months of reserves, higher credit scores, etc. So lots of variability here. I actually had a doctor that was relocating here a couple of years ago, and he was already pre-approved with another lender, and that lender, based on the loan limit at the time, was requiring that he put 10% down. But he had VA home loan benefits. So his agent asked him to talk with me, and once we kind of dove into it, we were able to give him a better interest rate with no money down and no mortgage insurance. I mean, the side-by-side comparison was crazy. Now, a lot of lenders don't really specialize in VA lending. So if you're having this conversation with a loan officer or a lender that just isn't skilled in VA financing, they might sway you over to the conventional financing. So just be sure you're talking with an experienced lender that really understands the differences and can give you a side-by-side comparison so you can decide what's best for you. If you have served in the military, the National Guard or the Reserves, or are currently serving and you want to research whether VA home loan benefits are an option for you, find out more by clicking the link below to schedule a personalized consultation with a Kelly Zitlow Group mortgage advisor. My team and I are very well versed in VA financing as well as conventional financing, so we can give you that side-by-side comparison. Thank you so much for watching. We've got more on VA home loans coming your way after this one, so stay tuned. If you have found value in this video, please subscribe to this channel so we can grow our community and help more people better understand if they have VA home loan benefits or what the best home loan program could be based on their scenario. Thanks so much for watching.